Even when you feel low, you can still go. Even when you feel slow, you can still go. Even when there's no hope, you can still go.
Last week we marked the chart starting from, let me reduce some of this noise on the chart. Let's see, yeah, volume 2. That should keep the chart a little bit cleaner. Yeah, so last week we marked up the chart at these major levels. We had this resistance level in the 5200s. Then we had our, then we had the support level in the 5100s to around 5,000-ish, right? And that was the support level. And then we had the mid-range, which is around the 5100s. So those were the three major points of levels or zones of interest, if you will. Okay. Now, so the week started obviously on Monday the 8th, no, the 9th. Let me. Anyway, around there, and then also ended on Friday, right? The anticipation was, at the time the market was at this level, the anticipation was the market was going to come up to resistance, and then it was going to go down back to the 5100s, right? Or stay languishing in the resistance zone, right? If geopolitical news would support that based on the conflict that's going on in the Middle East. But things went according to plan, and it went to resistance, came down to support. But this is the 4 hour, right? So you're looking at this at a high level. But now let's go to the 1 hour view, so I can give you the play-by-play of how I approached the market in terms of that, right? So when we marked up the chart, we were in this area, and as you can see, price bounced off the zone, came up, and remember I had a trade. If you remember from the past video, I had an active trade. So when price hit this mid-level, I did get out of the trade. I got out of the trade, right? As you can see, price reacted here, came back down, retested support, and then went back up. Around this area, I entered another trade. And as you can see, as price hit the mid-range area, it passed through, but then it came back and retested this area. I did have a trailing stop loss, so upon the retest, it took out my trade for another decent size profit. And then price bounced off again, that mid-level zone, and continued up. I did enter a trade, if I remember correctly, somewhere around this area. It went up. I moved my stop loss, and when the price came back down, it hit my stop loss and took me out for a small profit. So basically break even, right? So at that point I just sat out. As you can see, price shot up, came to the resistance level, price leveled off, and started coming down. I had missed this move, but then price came back to retest the resistance level, came back down, and at some point around here I did enter a trade. And price pushed down, retested several times the resistance zone, but kept pushing down, and again hit the mid zone, right? And this was around Wednesday. Hit the mid zone, retested it, came back up. I got out of that trade, and you can see price came back up, tried to hit the resistance area again, and then came back down. As it came to the mid zone, it reacted but continued to push down, and as you can see, it hit the support area, and price bounced back up to the mid zone, and then bounced back down to support level, and came back up to retest the mid zone level, and went all the way down and overshot the support zone, and price stopped here. Now as we open the market this week, we can see price is reacting below the support level, which is now sort of turning into a resistance level, but I do anticipate price coming back up, and we'll go over that in a second as to why I think that's what's going to happen, right? Okay, for this week I am going to keep the same zones because I think those zones are going to respect it. even though price is below support right now, which is kind of like resistance now, I think price is going to bounce back up into this area. And I'll explain why I think that in a minute. Yeah, so basically price did what it was supposed to do according to what the zones that I had plotted on the chart. And that's why it's very imperative to make sure that when you're plotting your zones, you're doing it in a very, very careful and accurate manner, right? You're always doing it in the higher time frames, which always affects the lower time frames. But your entries, at least I like to do my entries from a lower time frame, because especially as a scalper, I'm a scalper. Now I know some scalpers don't even bother looking at the 4 hour and sometimes even the 1 hour, but I find that it's very helpful because it gives you a sense of direction as to what the market is doing, right? So yeah, marking zones is very important. Now, another area of interest is down here. As you can see, price already bounced off of it, but I don't think that's going to be prominent this week. I think price is still going to play above here in this range because of what's going on globally and what's happening with oil and the war. And then you also have Fed news coming up, and we're going to look at all that. So yeah, let's go ahead and take a look at some of the trades that I did along this path, or this mapping on the chart, and how it played out. All right, as we come into my FX book journal that shows my trading activity, this is the overall performance. Down here, if you look at the periods, I'm not able to go to last week. I guess that's kind of the limitations when you're using a free platform. But so far this month, you can see up by 7%. 19,000 profit. I don't think they're counting the pips right. I think you would have to divide this by probably 100. So I think it was more like 818 pips and not 81,000 pips. That would be crazy, right? Win rate was 76, which is not bad for this month so far. But overall for the year, it's 59%. This needs to go up. January in the beginning was kind of difficult, but I think that number will go up. But again, hey, if you're making profit, win rate really doesn't matter, because it could be that you have a lot of losses, but very small losses. So, but anyway, those are the numbers. All right, and even though I'm not able to look at last week's trades on here or numbers here, here are the numbers of the trades from last week from the phone. I can do that from the MT5 app on the phone. So here we go. As you can see, these are the trades. Definitely a lot more longs than sells. But yeah, overall it was positive, and look to do the same this week based on the plan or the levels that we have marked up on the chart. All right, so we've looked at the technical part of things. Now it's time to look at the fundamentals, because there are two elements that affect or drive the trade of gold. You've got the fundamentals, what you see in the chart and what we're plotting, but then you have the fundamentals that affect gold. And this time around, two major things, right? One, we all know, is the war that's going on in the Middle East. And then the other thing has to do with the economic news that's coming up in the US in terms of the Federal Reserve and what they're planning to do, and what the Fed chairman will ultimately say when he issues his statement. Those two things will fundamentally drive gold in the middle of the week, right? Now, as far as the war, we really can't predict when that's going to do anything. It's unpredictable. If we go back to the chart, let's look at oil, for example. Oil right now is at $96, basically $100. Back here when the war first started, you can see how it just went up, basically shot up all the way to about 112, right? But since then has tapered off. It's still high, but it has tapered off and is now at 96. And I think before this is all over, it's gonna shoot back up at some point. That's what I think anyway. I don't actively trade oil, but those of you that do can see that it's trending up. If we were to draw a trending line here, you can see it is steadily trending up, right? And at this point, it shot up a bit, came back down, and then it's now starting to inch back up. Interestingly, if we look at the dollar index, it basically is doing the same thing. Again, we put a trending line here. You can see it's trending up as well, similar to oil, right? It's at 99, and also when the war started, it kind of jumped up as well in this area right here, right? You can see it jumped up, came back down, and now it's trending back up. Basically similar to oil. Anyway, let's look at the economic calendar. So on Monday, not much in terms of the US. You got some activity in Canada and Australia, but that's not going to mean much for gold. Tuesday seems to be pretty quiet as far as gold is concerned as well. And then we get to Wednesday and things get really busy. Now, if starting at 8:30, we have, so 8:30 around here, we got some USD news. We have the core PPI month over month and the PPI month over month, right? These are the forecasts right here. I don't think these are going to move the market much. It might a little bit, but the majority of the momentum is probably going to pick up. It's most likely going to pick up during around 2 p.m. 2 p.m. to 2:30. Okay, and this is going to be Wednesday. So first thing is you have the Fed funds rate, right? The forecast is it's going to remain at 3.5. But then if it goes lower or higher, that could definitely move gold. Second, you have the economic projections that are going to be provided, and then also the statement and the press conference. Depending on whether the Fed is hawkish or dovish, these will definitely affect and move gold one way or the other. So definitely expect some volatility from that. I don't think there is anything happening on Thursday in terms of that. Let's see. Okay, JPY, British pound. All right, around 8:30 a.m. we also have the unemployment claims. So we have the unemployment claims at 8:30. Forecasted to come in slightly above the 213 to 215. If it sticks to that, that's not much of a huge difference, but it still might have a little bit of effect on movement of gold. Now, if it comes in way under or way above, then all bets are off in terms of how it's going to affect gold. It's definitely going to be, if that happens, it'll be a major breakout one way or the other, right? So look out for that. But after that, I think Friday is going to be quiet. Let's see, Friday. Yep, Friday's pretty quiet. So for those of you who like trading on a quiet day, that might be a good day for you, but most people don't trade on Friday. So it depends on whatever your plan is. So that is the fundamental side, right? Now, one thing I usually do is I also, hey, this is the age of AI. So you definitely got to consult AI just to, dot your I's and cross your T's, right? So I do that as well. So I went into AI and asked AI, like, what is the outlook of gold? I usually do it for like the next 48 hours and then for the whole week, right? So I want AI to give me its outlook for the next 24 to 48 hours and also for the entire week, right? All right, so let's see what AI is saying here. Here is a professional trader style macro and technical outlook on gold based on the latest viable context heading into the week, okay? So it's going to break it into the macro catalysts, technical structure, which we looked at, and also session volatility expectations and actionable if-then scenarios, right? Telling you what you could do if certain things happen, okay? So there's the date, there's the context of what we're looking at, right? So it's telling you gold is currently trading at this level, which is a consolidation range, right? If we go back to the map, you can see this is exactly, the 200s to the 1550. So that's the range, right? Now gold is down here, but like I said, I do anticipate it coming back up to this level because of what's going on in the world right now. Unless the Feds come up and say something really drastic that's going to push it way down, but I think gold should come back to this range. Okay, go back to AI. So basically AI is basically stating the same thing, right? Yeah, okay, after a volatile week, driven by USD strength, we saw how the USD went all the way up to 99. Geographical tensions, we know what's going on with the war, and then also shifting Fed expectations that coming up, like I said, in the middle of the week, right? So says the same thing. The market is effectively waiting for the Federal Reserve meeting and inflation signals, right? So it's telling you what to expect and what's happening. All right, one major fundamental catalyst, right? Federal Reserve decisions, which is expected in the middle of the week, right? We already went through that, and it says this is the dominant driver. Again, because it's already scheduled, it's expected, and it's known, right? Now, it's only the only thing that's left to find out is what are they going to say, what numbers are going to come out, right? But that's happening, right? As far as the Middle East war, you can't predict nothing, right? They might decide to do a ceasefire tomorrow, right? You never know. Okay. Now, the markets expect the Feds to hold their rate between around 350 to 375. As we already saw, the forecast was at 375, right? Okay, however, the real driver will be dot plot projections, Powell press conference, yeah, exactly what the Fed chair will actually say, and forward guidance on the fund rate cuts. So not only what rate will come out, but what will be the guidance for onwards in the future, right? Okay, so bullish gold catalyst, right? So if you're looking for a bullish outlook, what are the things to expect if the Fed signals slower growth, higher unemployment forecast? And also remember, on Thursday after the Wednesday busy, there's also unemployment forecast numbers coming up, right? Potential rate cuts later in 2026. So again, going back to the guidance of the rates, this will cause USD to fall, real yields to drop, and then gold will rally, right? Then you have bearish. If you're expecting a bearish outlook, things to watch out for, right? Inflation persistence, delayed rate cuts, and USD strengthens, and then of course gold will drop, right? Inflation and oil shock, right? Middle East tensions have pushed oil towards 100, 120. Well, we know it's now at 96, which is pretty much close to 100. Increasing inflation risk. Yeah, we see it everywhere. People are complaining about gas prices going up, not just in the US, but all over, right? This creates two opposing forces, right? One is higher inflation, right, which will cause gold to be bullish, but you also have higher rates expectations, which causes gold to be bearish. So that's why gold is in a consolidation, in a range, because these two things are kind of like, pushing on each other, and one side has to clearly win out before gold decides to go in a particular direction. And in the middle of the week, the Feds could eventually push it into one direction, right? Then you have the geopolitical risk. We know what's going on with Iran and the Middle East. Definitely that's going to affect gold if things get really bad. So the tensions escalate again. If well, they're already fighting, but if they escalate beyond where they are right now, then you're going to have risk off flows. Gold spikes quickly because everybody will be running for safety. But if tensions fade, then the safe haven premium unwinds, and then gold will drop because now people will feel like now they can get away from safe haven and go and do what they need to do, that they usually do when things are normal. Dollar and real yields. Gold remains extremely sensitive to US dollar index, of course, 10-year real yields, and that's going to depend again on the rates that come up in the middle of the week. Gold weekends last week largely occurred. USD strengthened and reduced rate cuts. Okay, yeah, so same thing. All right, so now it's going over the technical structure, which we already looked at, but let's just go through it real quick. Market structure. Gold is currently in a range after a strong macro uptrend. We saw that on the charts. The range, we saw that again. Those prices where the gold is ranging. The range has been held for several sessions. Yep. Think of it as a compressed spring. Yeah, which will eventually release. Breakout is likely to happen after the Fed. So breakout is likely, if you're a breakout trader, then that means it's telling you that breakout is likely to happen after the Fed news in midweek, right? So look out for that. Now, key technical levels, major resistance, the 5200s basically, which is exactly where we have the major resistance. And then If it pushes up to 5,300, 5,300 is a psychological and potential weekly breakout, right? If it consistently goes to 5,300 and consistently stays above that, then yeah, it might be a breakout going to the 5,380 to 5,400 areas, which is basically record territory. Gold has never been that high. If it goes beyond that, and yeah, we'll just watch the market and hopefully just hold any buys that you have and see what happens. Then we have the major support, which is in the 50-60 and 50-50 areas, and we can see this is this area down here that we had marked off last week, and we continued with them. I mean, if AI is also seeing those same levels, man, you must be doing something right in plotting those major levels, right? So that's real support. Liquidity pool 5,000 is definitely a psychological level, and is also a strong institutional defense. Okay, you go below that, weekly support if breakdown occurs. So at that point, things might start to be, things might be breaking down from the normal range, right? Depending on circumstances. As we can see right now, it is below that main support level, which is now kind of like a resistance. But like I said, I do anticipate price coming back up above that zone. Where are you? Okay, market positioning. Okay, current positioning suggests hedge funds still structurally long on gold. This is very important to know. The big guys with the big money are still long on gold, but short-term profit taking. So essentially, this could be all this downside is them profit taking and getting ready for the next upswing, right? Essentially, that's what AI is saying. Okay, this creates short-term correction within a long-term bullish trend. There you go. Volatility by trading session. Okay, this talks about the Asia session. I don't usually trade the Asian session, but it's usually range trading, liquidity sweeps, position building. That's typically what the Asia session usually does. Watch China macro data. Okay, yeah, it makes sense. China's the big elephant in the room when it comes to the Asia session, so definitely want to watch the data from China. London session, often the true direction begins. Large gold clearing houses operate in London, so yeah, expect breakouts from the Asia ranges. Okay, good to know. New York session, which is mostly what I trade. Most volatility occurs here, and that's what I look for because that's where you have most volume, so you're gonna have most volatility. Okay, it starts at 8:30, data releases, then you have the Fed announcements, which are gonna happen in the middle of the week, and then 2 p.m. policy direction, right? So these are all going to really get the market moving one way or another. High probability scenarios. Now it's giving you the high probability of things that might happen in the market and what you need to look out for, right? And how you might want to position yourself. So scenario 1, bullish outbreak, probability is 55% that the market is going to be bullish. And that's why, again, I anticipate price coming back up at least to this mid-zone area, right? Past the that support there. All right, so it's saying probability is 55% that there's a bullish breakout. And it's looking at the 5,200. I'm not so sure it's going to get all the way up there, but it might, right? But if you're doing long-term trading and you're looking at that levels, it's suggesting that you target these levels. So this might be your TP1, TP2, and TP3, basically, is what it's saying. If you were to, if it breaks above that and then you enter around that area, right? But I don't know. I would start much earlier than that. But anyway. So what are the things that might make that happen? Well, dovish Fed, weak USD, geopolitical escalation, right? Obviously, the third one is unpredictable, but this right here is most likely what will happen. It will happen, but it's most likely that the Fed is going to be dovish. But if they come in hawkish, then it's going to do the opposite. Invalidation. Well, if you enter there and then you're invalidated, it's saying you need to put your stop loss around this area. But again, it comes down to how you trade and what your risk management strategy is. Scenario 2, bearish breakout or bearish outlook. It's saying probability is 45%. So obviously bullish scenario is higher. But in any case, if this happens, you break down below the 5,050, then your targets should be 5,000. So this would be your TP1, TP2, and TP3. Now, Gold has gone below the 550, but again, you can see it's saying TP1. In fact, TP1 has already been hit, really. Yeah, around here, right? And it's sticking to that 5,000 level, which is a major psychological level. But if it goes beyond that decisively, because you can see every time it gets to this other level that we talked about before, it gets rejected, right? And I think it's going to come back to this level. Anyway, back to AI. Catalyst: hawkish Fed, strong USD, rising real yields. Invalidation: if gold goes back up to 5120, then if you stop loss, that's going to hit there. Intraday liquidity zone. This is specifically for scalpers, right? You know, it's saying areas where you need to scalp above liquidity and below liquidity. These are areas that you would be scalping, right? So it's giving you guidance. You know, it looks to me like it's very good guidance because it is in line with what I had already plotted on the chart and looked at. So it's good that it's validating what I had already seen in the market. If it was saying something completely different, then I would probably have to go back and see whether I was wrong or the AI is wrong. Most likely I would be the one wrong. Risk management levels, professional style. So for long, this is where it's suggesting you know, entry zones, right? And where you would put your stop and the targets, right? From that level where we're at right now, if you're projecting longs, right, that's what you would do. Now I would wait for 8:30 a.m. EST for those of you on the eastern side of the US. Monday, right now it's 10:42 p.m. on Sunday, so got a ways to go. And then for breakout longs, right, where you're going to be trading beyond the range, these are the numbers you need to look at. For shorts, this is it right now. Weekly direction bias, right? So short-term bias is basically neutral, slightly bullish, but mostly neutral, right? Because gold has not decided yet where it's going to go, and I think it probably won't be doing that, being decisive in terms of direction, until midweek after the Fed news comes out. Okay, structural demand, central bank, yeah, and then also, of course, whatever's going on in the Middle East could also affect that. But it's saying the Fed decision will override everything. Yeah, that's very important. So midweek is going to be crucial for gold traders. The single most important level this week, 550. Okay, if it breaks, market likely test 5,000, which it has already done, right? Now this came out before the market did that. I'm just reading it now, but yeah. So true to its word, gold broke 550, and it did come to the 5,000 level, and that's where it's at right now, basically. So yeah, right on point, right on point. And if it holds at that level, then gold likely to retest 5,300, which will be up here somewhere, up there somewhere. Okay, my professional trader playbook this week. Okay, if I were trading this week before the Fed news, you want to range trade. Yeah, that would be smart. Yeah, so basically buy support and sell resistance. Makes sense. After the Fed news, you want to look out for breakouts only, is what it's suggesting, right? But it's going to depend on what the news actually says and how it's going to affect the market, right? But it's saying traditionally the Fed FOMC weeks often create false moves and then real moves, right? Yeah, so it might spike in one direction and then turn around and go in the other direction. So look out for that, right? All right, so essentially AI is agreeing with what we had talked about before, but it's good to see that we have some backup in terms of AI also seeing the same thing that we're seeing in the market. With that said, happy trading. Peace.
Even when you feel low, you can still go. Even when you feel slow, you can still go. Even when there's no hope, you can still go. I never answer to no, man, I still go. Go, 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 yo, go, go, go. Hustle hard, hustle every single day. I'll be making moves till I'm buried in my grave. To the system, I don't wanna be a slave. I've been doing shit my way, or the highway. And in the driveway is a nice range, cause I grind through to the climb, I invite pain. You'll never hear me, bitch, nah, I don't complain. Just gotta flip the switch and you can go and obtain anything you want, anything you need. Your mind's got the key ingredient, it's belief. They'll deceive with the negativity, but I just slide right by that energy. Even when you feel low, you can still go. Even when you feel slow, you can still go. Even when there's no hope, you can still go. I never answer to no, man, I still go. Go, 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 go.